Are you tired of struggling with your options trading? The highest paid online is having a March Madness sale on the VIP course. Use code MARCH40 to receive 40% off the VIP course. This sale ends on March 31st, 2025. Go to highestpaid.online and get started today.
What's going on, everybody? It's David W. Williams, also known as Diamond Dave, aka the Retail Trader. And appreciate y'all coming through. Gonna do this really quick broadcast. I'm gonna let y'all get back to it. So what we're talking about today, right? And if you have not seen this, this came across my desk earlier this morning about this deal between DoorDash and Klarna, where you can utilize Klarna to now, how would I say? You can utilize Klarna to order items on DoorDash. And I thought that was really, really interesting because from my opinion, if you're ordering food, but you can't afford it, why are you ordering food? I just really couldn't figure it out. But people were telling me this is just the state of the times that we're currently in now. Let me give you a heads up on some things about Klarna that I weren't aware of, that people are already using this app for things similar to this. And also that Walmart has an app or has some type of functionality where you can order your groceries using some type of buy now, pay later option. Now, I'm going to be very, very honest with you. I use Klarna on the platform I use to sell my course, but you're not buying food from me. I think till we get to the point to where you're buying food on an installment plan that's not your normal credit card. So I'm trying to figure out, and I haven't spoken to Klarna about it. They're getting ready to IPO really, really soon. And what's interesting is that earlier this week, I might have been Monday, it came out that they cut a deal with Walmart, right, to be Walmart's preferred vendor. And now they're cutting this deal with DoorDash, and this kind of moved DoorDash stock up a little bit. They had been beaten down recently. But I'm trying to figure out, is their ideal customer somebody that is unbanked and doesn't have credit cards, or is this supposed to be an accessory to what the credit that somebody else already has? Because I don't use Klarna to order food. So I would try to figure out, is a person using this because they're looking for some other credit options outside of what they currently have, or is Klarna's ideal customer, DoorDash ideal customer for this particular feature, somebody that's unbanked. And so they don't have access to credit cards. So then that's why they're using Klarna. But it's just weird to me that I would have to break up a sub into 4 different payments, or maybe it's going to be 2 different payments, or however it goes. I'm just trying to figure out how that works. And when does a person kind of snap out of it and say, you know what, maybe I'm in a situation where I don't need to do this. So they've made it very easy for you to do it, but maybe it means that you don't need to do it. And so that's what we're going to kind of talk about, is that where do we think this particular economy is going based on what we see is going on in the world? Because I think these are the result of these particular organizations looking at the economic landscape and saying that we believe that these particular groups of people, this segment of the population, is going to be in this particular economic position. So then as a result, we can create this offer for them because it solves their problem, right? So we already have the DoorDash for the people that want to get food, because DoorDash is already at a premium. You got to pay a premium to get that food sent to you. Then now you also have to pay something else to get it done through Klarna. So you're paying 2 premiums. So I would assume that this would be an offer for a higher income person, but that's not who is speaking as to who this offer would utilize this, right? So that's what we're going to kind of go into. So really quickly, let me show you this real quick. We saw that Fed came out yesterday. Before the Fed came out, right, they do an economic survey. So they raised the risk of recession to the highest level in 6 months, right? Let me get rid of this banner real quick. And so a lot of the changes come from people having concern over the Trump administration, especially the tariffs. And they see them as a top threat to the U.S. economy, replacing inflation. But a lot of people believe that the tariffs will eventually cause inflation. So they surveyed 32 respondents, going to be fund managers, strategists, and analysts. They raised the probability of a recession from 36% to 36% from 23% in January. That January number had dropped to a 3-year low because of a lot of optimism when Trump first came in. But now a lot of businesses are looking at recession as a real big concern. So Barry Knapp of Ironside Macroeconomics, he says that investors increasingly concerned with the Trump agenda has gone off the rails due to trade policy. They believe that there's something more insidious than a soft patch are growing, right? This came out yesterday because we had the FOMC meeting. So a lot of policymakers thought that 2025 would be a soft landing. The goal was to keep inflation down without a big rise in joblessness. The latest projections point to the prospect that tariffs covering a swath of goods and materials will send up prices while sapping investment sentiment and growth, at least in the short run. We now have inflation coming in from an exogenous source, which means that it's coming from outside of what they currently have projected. But the underlying inflationary picture before that was 2% inflation, 2% growth, 4% unemployment. So officials now are projecting weaker growth, higher unemployment, and higher inflation than they had anticipated in December. Nearly all officials judge that if the forecasts are proven to be wrong, it will be in the direction of even softer growth, more joblessness, and firmer price growth. So a combination of stagnant growth and higher prices, sometimes called stagflation, can make it harder for the Fed to cut interest rates this year to preempt any slowdown. So what we saw yesterday when the Fed came out, they said that we're going to cut twice. And people kind of wanted them to cut more. And what they also said is that we're going to do a wait and see policy to see how these tariffs hit the economy. Right now, they're believing that the inflation that's going to be caused by tariffs is something that's going to be called transitory, which means that it's only going to last for a short amount of time. They said that before about the inflation during the pandemic, and they found out that they were very late to the party. And then they had to do a lot of really, really drastic things to try to get the economy back on track. One thing that people are going to miss, but I know the stock market sharks are going to catch it. The Fed yesterday said that they're going to ease a lot of their quantitative tightening, a lot of their runoff of their balance sheet. If they would not have agreed to that particular policy, I think that the market would have sold off really aggressively today, right? So they're going to hold back from a lot of their easing of their particular securities that they currently own, because I believe that they're uncertain about where this economy could go, because we won't know what the actual policy is around tariffs is until April 2nd. And I think there's still going to be some instability around that also, maybe coming from the EU. The goal, in my opinion, what Trump is trying to do is come out so strong that people look to go to the bargaining table before April 2nd. But now we only have a few weeks until that takes place. And I think that Trump's eventually going to have to do something, else he won't be able to get any kind of movement on tariffs if he doesn't do something very, very drastic, right? So we got to see how that plays off. So what we're seeing is that the financial sector is pricing in a recession. The FOMC, which is the Federal Reserve, they're pricing in a recession. They say they're going to cut the rate twice this year, which will mean we're going to get 2 rate cuts to easing up our federal funds rate, because they want to see how, once these tariffs come out, then they have to now transition through the economy. That's going to take time. How is the economy going to respond to that? So we believe that we're not going to get that baseline 2% inflation. We're not going to get that 2% growth. Now we're seeing GDP grow lower. And then we don't believe we're going to get that baseline 4% unemployment. Some people are factoring unemployment to go up a little bit more, lower growth, and then also inflation, and maybe if we're lucky, stay flat to increase. How is that going to impact people that are just regular 9-to-5 workers? And we're going to kind of talk about that. So we see why these type of offers where you want to get takeout, and now you have to essentially do your takeout on a payment plan, but we socialize people to where this type of experience is expected by them. So when I talked about earlier on this week about being a good steward of your money, but people being socialized that eating out makes them valid. Where if the desire to eat out is so strong, even though I'm in a financial position that may not be strong, I may still engage these particular businesses just so I can feel good about the fact that I can eat out. Because again, I've been socialized that eating out makes me valid, not only to myself, but to somebody that I'm trying to pursue or be in a relationship with or look good to, yada, 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 whatever that is. So the consumerism is so strong that even though I really don't have it like that, and I probably shouldn't be pursuing this, I will find a way to do it. And they've essentially facilitated a way for me to do it. But on the other side, when you get away from the mainstream of what people are talking about, we've already pretty much factored in that we're going to get declining growth. And a lot of people believe that the tariffs are going to cause inflation. So let me show you a really quick video based around that, and then we can get back to it.
How much of the higher inflation forecast for this year is due to tariffs? And since the policy path remains the same, are you effectively reading this as a one-time price level shock?
Okay, so how much of it is tariff? So let me say that it is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs, but we'll be working, and so will other forecasters, to try to find the best possible way to separate non-tariff inflation from tariff inflation.
Okay, so they currently right now are still trying to figure out how we can separate non-tariff inflation from tariff inflation, but the perception is that tariffs will be negative, right, to the overall economy. So we're going to go into a wait and see pattern. Now, for my people that are in the markets, we're definitely going to bring that into. We're going to also make sure we conclude that, right? So what we saw today is that Nike did their earnings. So if you're not aware of how the markets work, every 90 days, a publicly owned company has to do something that we call earnings. And they have to state, like, how much revenue do we make? They have to, essentially show their balance sheet to their investors because they're a publicly owned company. So their financial statements have to be public. So today, Nike did their quarterly earnings, right? We're looking at Seeking Alpha. Nike turns lower after guiding for a double-digit FQ4 revenue decline. So we are guiding for a decline in the double digits, right, amid global headwinds. Okay. Nike turned lower in post-market session after the company warned that it faces a tough quarter. So management said the company saw momentum through customers through athletic storytelling, performance products, and big sports moments. But the year-over-year revenue decline was led by a 17% drop in Greater China and consumer discretionary pressures in North America. So the lower gross margin rate during the quarter was said to be due to higher markdowns, the impact of clearing inventory, and channel mix headwinds, right? So for quarter four, Nike expect headwinds to revenue and gross margins to be at peak amid volatile FX, tariff pressure, and global macroeconomic weakness. Revenue during the quarter is expected to be down at the low end of a negative mid-teens range, while gross margin is seen retreating quarter over quarter and year over year, right? So this analyst says that 2025 will be a year of transitions where investors should have very, very low expectations. Revenues were down, even though demand creation expenses increasing. I think Nike is in a lot of trouble for a lot of different reasons. These tariffs are not going to help them because one of the biggest challenges that Nike has is they need to bring goods out of China. I don't see Nike manufacturing inside the United States. I don't think that works for their business model. So Nike's going to have to bring goods probably either out of China or maybe out of Vietnam. But they've had really, really deep relationships in China for a very, very long time. If we're going to tariff goods coming out of China, it can be negative to their business because why? Nike's bringing goods out of China into the United States. So if there's already a recession inside the United States and their shoes are more expensive, they're probably going to have to try to maybe eat those costs, which is going to lower their revenues, definitely lower their gross margin, right? Let's go to the next one. FedEx lowers their guidance on continued economic weakness, right? Citing the challenged economic environment that's constrained demand for its business-to-business services, FedEx now expects revenue to be flat to slightly down year over year versus the prior forecast of approximately flat. So before they said that this year will be flat. Revenues flat means that we're not going to lose, but we're also not going to gain any revenue. Now, as an investor, why would you invest in a company that's not gaining? So that's what you got to ask yourself a question. Now they expect it to be flat to slightly down. So they're saying now the range is that flat's going to be the best case scenario. Worst case scenario is that going to be slightly down, right? Also going to lower capital spending. So it means that we're going to try to make sure that we don't spend money on anything that can maybe increase our operating cost. So we're going to lower capital spending. Previously prioritizing investments in network optimization, improving efficiencies, that's going to be decreased because they're not really sure how much money that we're going to go in. And then we're also talking about their B2B business is going to go down. Now, if you know FedEx business, if the economy is down and people are not spending as much as they were spending previously, that's not going to be beneficial to FedEx. So they just reported. So these are some of the things that you want to look at, to where we're starting to see larger organizations already start to position themselves for an economic downturn, and that they're communicating out to their investors that you should anticipate an economic downturn. So these are why I think it's really important to be not necessarily a slave to the markets, but understand this particular conversation, because FedEx employs a large amount of people. And if their business starts to turn down, that now can impact their employment. Okay, so I want to give out something real quick. Here's a special bonus to people that are kind of tapped in. Question I want to ask you: is there a correlation between FedEx earnings and UPS earnings? Is that going to be a yes or a no? If yes, explain the correlation. And what do you think the impact will be on UPS earnings? Right? And so I'm going to ask you to come in and talk about it. And if you can, I'll cash up you $20 if it makes sense. I don't have to agree to it. It's got to make sense, because the goal is to help you see these correlations in the market, right? Both FedEx and UPS are in similar businesses, right? So if FedEx is guiding a certain way, what do we think the impacts will be on UPS? Or do we believe that UPS is such an excellent business, they're such outperforming FedEx, that they won't have those challenges? But if I have one particular business saying, hey, I'm going to do some macroeconomic issues, we believe our B2B volume is going to be down, and there's another business in that same particular area, right? How do I think it's going to impact that business? Because that's often where the next trade is coming from. And if you can start to see these particular connections, it can be very beneficial to you, as opposed to, the never-ending conspiracy theory, right? But if you can see these type of connections in markets, they can be very, very beneficial to you, because FedEx is signaling out what they believe their next 12 to 24 months is going to look like, right? So that's going to be for everybody that wants. Like I said, if you could come in and talk about it, here's an opportunity to get you easy $20. I cash app it, and I cash app it to you live on a particular call. So that's something that we want to look at. So really quickly, let me go to this other video in which this particular economist talks about how he thinks that some of these tariffs are going to impact the economy, and then we're going to get right back to it.
The last time we spoke, you raised the issue. I believe Lisa asked you the question: would that soft data bleed into the hard data? Do you sense a inevitability now towards that?
We are beginning to see that if you look at high frequency data. So over the last several weeks, we have seen, and I know some of these indicators are a bit special, but we've seen the number of people who are going to movie theaters, number of people going to Broadway shows. If you look at the TSA data for how many people fly in airplanes, even if you look at how many people are visiting the Statue of Liberty here in New York City, all that has actually started to weaken. And now we get another soft data print here at 10 with the Michigan sentiment for consumers. So overall, it is still a little bit too early, but given that we have this wait and see situation, both for consumers and for corporates, it does make sense that the soft data should eventually begin to spill over to at least some weakening in the hard data.
One feature of this cycle that I think a lot of people underestimated, you not included, is the resilience of this economy. What is our capacity to absorb shocks now? Has that been reduced?
Well, that's a very important question, because that depends on the nature of the shocks. And we're facing two shocks at the moment, namely DOGE, which is laying off government workers. Estimates suggest that will be around 300,000 workers that might be losing their jobs. Remember that for every federal worker, there are 2 contractors, according to Brookings. So Brookings studies show that in total, true employment in the federal government is roughly around 9-10 million people. So if you now think about total number of households is 130 million, and someone in a federal worker or contractor lives together with someone in the private sector, you get that as much as 10-15% of all households in some way or another is being impacted from a sentiment perspective by DOGE alone. And tariffs, of course, also in particular impacts anyone who is associated with trade with Canada and Mexico. And you have that is also a particular, of course, across the border to the north and to the south, playing a significant role in a number of states. So the bottom line is not only tariffs and trade war, it's also the combination of the risk that government workers and contractors potentially losing their jobs that are the main reasons why the soft data is weakening the way it is. And it's not only consumer soft data, it's also corporate. If you look at the CapEx planning from the regional feds, Dallas Fed, Philadelphia Fed, New York Fed, that's showing that businesses in those districts are saying we're beginning to cut back CapEx plans. Likewise, NFIB, also roundtable surveys, CapEx planning is also moving lower. So both consumer confidence moving lower, corporate confidence moving lower. It is a precursor for a slowdown coming in the hot data.
There's an argument being made that if what was propping up the United States economy was government spending, it wasn't that strong to begin with. And this is actually somewhat of a withdrawal from a sugar high from an incredible amount of fiscal spend in the direct aftermath of the pandemic. Do you buy that?
There is some truth to the detox argument in the sense that if you look at hiring in non-farm payrolls over the last 2 years, 25% of jobs created in 2023 and 24 were government jobs. The previous years, it was like 5-10%, much less. So a very significant part of jobs in the last 2 years have been coming from the government sector. So it is true that job growth has been slowing in the private sector, even going into these shocks that we're looking at the moment.
Heading in.
Okay, so what I like about what he talked about is that when you're looking at layoffs, right, and we're seeing a lot of layoffs through Doge and what we're now starting to believe could be a slowdown in the economy, we have to understand that that layoff doesn't just impact that one person, right? So when you're looking at a government job, there's people attached to that particular government employee. So they're also employed because of that particular government employee. Then that government employee now goes back into their community. They have relationships. And how does them losing their job impact that situation? So if I'm a member of a family and my spending gets cut off, my ability to earn gets cut off because I lose my job, how does that impact my overall family? So there's always, when you're looking at economic models, there's a lot of connections that I think people don't see. And so when we're talking about people being unemployed and how that can be detrimental to spending all across the board, and we talked about earlier this week, is about how this American economy is 2/3 consumer spending. Therefore, if consumers don't feel confident about the future, if they're worried about this and this going to happen, I think a lot of the signaling that this administration has done around tariffs, it hasn't hit the mainstream yet. If things get bad, it will hit them, right? We know that the mainstream news media, they're not talking about this yet. They're talking about people popping a balloon and other kind of weird stuff. But if this situation now starts to unravel, they lose control of it, it will start to go to them, right? So that's the reason why I tell people I would encourage you to look at journals like the Wall Street Journal. Seeking Alpha is a paid platform, but there's ways to get concept of financial material, because I was talking to somebody maybe 2 weeks ago about 08. And what I was trying to get them to understand, and I may not have communicated properly, is that 08 didn't happen in 3 days. It took years for 08 to happen. If a person was tapped into what was going on in the investment world, they would have been up to speed as to what was going to happen if they were kind of trained to see it, right? So the problem is that when 08 happens, then the mainstream media jumps on board with it and they make it the main story, but it took 5 years to get to this particular point. So the mainstream is not really talking about tariffs yet, right? They're not really talking about what's going on with a lot of these layoffs and how it can be detrimental to the economy. It's not something that's being discussed. If things start to spiral out of control, they'll make it the main story. But anybody that's been trading, knowing that this stuff's been going on since January. The market has been extremely volatile since January. So then situations to where you can, I guess, order takeout using some type of payment plan will start to become the thing to do because of people's economic condition. Because one thing we see in America is that we're so marketed to that we're supposed to have a certain type of lifestyle because we live in America. Even when we don't have it financially, we still try to maintain the lifestyle, or we try to get somebody else to get it for us. And you're going to see even more of that if this economy starts to turn down, because a lot of people that are really savvy, they feel like it's going to be the second half of this year is where we're really going to start to see the impact of a lot of this economic policy that they're rolling out. Okay. Let me go into a really quick, I think I got this off of TikTok, where this woman shows how she was buying groceries off of Klarna. And I didn't even have an idea that you could even do this. So let me go ahead and show this real quick, because I think it's going to show what people are going through in this world that many of us are not aware of, but it's a real thing for a lot of people. Let me go ahead and share that out real quick.
Y'all really need to start using Klarna to get your groceries. Groceries are expensive, but I got all of this today for $55 because I used Klarna. So $55. I think the total was $222, and then I used the Klarna, and then I had a $5 coupon, and then it all came out to $55. So don't sleep on Klarna. It's not just for buying clothes or whatever else you use. You can use it on Instacart to buy your groceries. That's what I used it for. I just do the pickup method because I don't like them to deliver my groceries. I go and I pick it up. And it's easier for me to do it that way. I think it's $1.99 to do the pickup for delivery. You know,
Okay, so I guess she got some type of special bonus deal for using Klarna. I don't know if that's last. How long can you use that bonus deal when you get that big discount of your groceries? I would have never thought using buy now, pay now to buy groceries. So again, there's a lot of behavior in this particular market that's designed to hit different segments of the market that I may not be aware of because I may not be in that particular segment. And a lot of people are trying to figure out how to adapt. I will admit to you up front, there was a time in my life where I used check cashing places. And I've explained to people that there is a segment of population that needs check cashing. I think in Georgia, they may have outlawed title loans. I believe in Florida, title loans are still available to be done. Georgia may have outlawed them. A lot of these financial models where you can get quick cash, where you can essentially operate on some type of quick credit, they're targeted at certain segments of the population because there's an economic necessity for it, right? And so I think, again, nobody really wants to have these kind of conversations, but a lot of times the data is showing that there is a necessity for it. And so let's see if this particular deal between DoorDash and Klarna starts to really take off, because they will get data for it, because they definitely want to know. Klarna is going to want to pitch to investors. Ever since we got into this particular relationship with DoorDash, it's driven X amount of money through our particular system, right? Because we know, because of Affirm, that their goal was to take those particular loan packages and sell them off into the bond market, right? So they're definitely going to get data on it because they're going to want to show that data to investors. So let me show you something real quick about income insecurity, people living check by check. And I'm going to do a video on this a little bit later, but I wanted to show you this really quickly before we conclude what I was talking about. Because like I say, we're not going to be here that long. Let me go here. So there's a particular data aggregation site, right, that I was reading. It's called PYMNTS. So we're talking about the 45K paycheck to paycheck tipping point. So analyzing 5 years of payments intelligent data released 2 critical income thresholds and describing the financial lifestyle of consumers. The data finds that the first significant threshold occurs at 45K to 49K, when individuals begin to shift from struggling paycheck to paycheck, living to a more comfortable paycheck to paycheck lifestyle. The second critical threshold appears in the 125K to 150K range, where people become increasingly likely to say they no longer live paycheck to paycheck either by choice or necessity. As income climbs to more than 85K per year, the incidence of living paycheck to paycheck by choice begins to decline as more and more consumers indicate that they no longer live paycheck to paycheck at all. So what's particularly interesting is that this shift is not universal, and many individuals with moderate to high incomes continue living paycheck to paycheck despite having the financial capacity to do otherwise. So they're comfortable paying bills, but still spend most of their income monthly because of their monthly income and savings backstop, right? So if paycheck to paycheck status was solely dictated by income necessity, we would expect to see a much steeper decline in all paycheck categories as income increases. However, the gradual nature of this decline suggests other factors at play, including the fact that consumers with income over $250,000 are 30% more likely to continue to live paycheck to paycheck by choice, right? So the key insight is even as financial capacity increases with higher incomes, many individuals continue to choose to live paycheck to paycheck rather than transitioning to non-paycheck to paycheck status, right? So I think this is really, really important, because what we're seeing is that people's behavior around money often will not change as they make more money if they don't really understand or have the discipline around what to do with the money. So as they make more money, they're spending it up. That's what we talked about earlier this week about financial stewardship, right? But we also see that it takes to be above 50K a year where people shift from struggling paycheck to paycheck to being more comfortable. So this is why we've talked about really ad nauseum here, where we've told people, I want to really encourage you how to make more money. I want to encourage you how to figure out how to make more money. Because what can happen is, in this country, we will normalize not having. And we'll build our whole life around it, right? Robbing Peter to pay Paul. I talked about the things with the apartment complexes where people are we used to do all kind of stuff to get apartments. Now, because of a lot of artificial intelligence, they're eliminating your ability to do that. What they're going to continue to do is segment and discriminate economically against more and more people to where you're going to be stuck. And these people are not coming to save you, right? And so that's something that I really am very passionate about to the people that are willing to listen and then try to do something about it. You have to understand where this particular system is going, okay? If you want to just get lost in the sauce and get distracted, that's cool. You can fall in line with the people that make around $50K a year that struggle paycheck to paycheck. And then they're going to have a million entertainment opportunities, more social media. There'll be more social media in 5 years than it currently is today. There'll be something that'll come out of the next 5 years and make TikTok look like it's nothing. Because I remember what it was before TikTok. And more people will get caught into it. And to just make sure that you can consume, because when you're looking at this particular deal between Klarna and DoorDash, this is a deal to make sure that you can consume. This is not a deal to really improve your economic position in the world. This is a deal to make sure that you can consume, right? So we talked about before, this system needs to produce consumers. It needs to facilitate consumption. This is a deal to make sure that you can consume. It's for food. It's for takeout. It's not like you're buying something that's going to be beneficial to you long term. It's for takeout, right? And so that's what I want you to understand is that the world is factored in that you're not going to do anything different with your life. That's just what they've already created that analysis about you. You're going to stay right where you're at. We're going to give you some basic creature comforts. You're going to appoint some celebrities to be your people that you want to boost up, and you're going to try to live vicariously through them. You've already been conditioned that the people that you look up to should be millionaires and you should make $40,000, $50,000 a year. You've been already socialized, and those type of relationship dynamics work for you. So the ball's going to keep rolling. And then what they're going to do is they're going to focus on the important things of society. They're going to make sure that their children get set up. Erica did a really, really good video talking about that today. They're going to make sure that those things get set up. You're going to promote a few celebrities to the highest level, right? They're going to become millionaires, but the masses of people not going to have nothing. And they're just going to be lost in the sauce. They're going to be like a cork in the ocean. They're just going to have to float with it. But they're going to be very much entertained. They're going to have a lot of good content to absorb. They're going to have a lot of good discussions and debates around a lot of stuff. And that's going to be their life. And this has already been factored in, right? I want you to understand that they've already done this analysis about you. So you have to decide that you're going to do something different and that this type of lifestyle is going to be unacceptable to you. And then you're willing to put the work in to get to the result. Because I really believe if we're going to change things on a macro level, people have to change their personal economy. I do not believe this narrative that we're going to change things on a macro level and people can't change their personal economy. There is no revolution if people don't have personal discipline, right? That's why I said a lot of these people are liberals. They're not leftists, right? And I didn't say I was a leftist because I know I posted something on my community wall early this morning, and what the person replied back was nothing that I said. We're still dealing with a reading comprehension issue inside the United States. So these things allow these people to come up with these type of analysis to where they know that the majority of people are going to stay right where they're at. But I'm a big believer that before we can change these macro situations, people have to change their personal economy. And I think it's the challenge to change people's personal economy, and the work that needs to be done is where a lot of people struggle. So that's why we're really trying to help people at that particular level, because then that can go to the macro change. But there will be no macro change if people change their personal economy. Okay? And so we're going to continue to talk about this particular thing. Let's see how this rolls out. But I want people to understand this deal between Klarna and DoorDash is making sure that people can facilitate consumerism. And again, not for something that's going to be beneficial to them. You're not buying a course on how to do tax deeds. You're just buying takeout food, which you're going to consume. And in 5 minutes, 10, 15 minutes, you're not going to have nothing to show for it. Right? So you really got to understand what we're facilitating now. It's just really low level, pleasure seeking. How do I call it? Impulsive consumerism. But we're making sure that people can do that to the best of their ability. So we're going to eliminate any barrier for you to do that. Right? So you have to understand what's been factored in about you as a person inside the United States. right? And how they factored in what the masses of people are going to be caught up in already. So when we try to bring in different type of conversations, it's very unfortunate that people can't latch onto it, because I talked about before, what they're paying attention to doesn't allow them to just shift into another lane. There's a saying that people learn playing sports, is that you can't turn on being a champion. You can't just be like, I don't care, it's whatever, yada, yada, yada. And then we get to the championship game and you just turn it on. It don't work that way, right? And if you really follow the greats, you'll know it don't work that way. People kind of think I can fill my head full of nonsense, and then when something serious comes up, I can all of a sudden jump on the serious stuff. You don't have that kind of talent. You think you do, but you don't. And your life is a result of that. You don't have that kind of gift, but you think you do. And so I want to really get people to understand, if you just fill your head full of a bunch of nonsense, when a serious situation shows up, your response to it would be an indicator that you can't turn it on and off like that. It's not a light switch for you, but you think you can, right? Because a lot of people think they can, but their life is a result of their inability to do that. So again, here's the question. Like I said, you got to come through to get it. So you got to come on, give you $20 through Cash App if you can explain this, right? So you're going to have to do a little bit to get it. Questions, comments, and disagreements, you could come on live. I'm going to read the super chats. And then, we're going to hit it to the next episode. Cedric Webb, man, appreciate the $4 super chat. Big up to Salt Lake City. Emika, man, appreciate the $6 super chat. Pascal, man, thank you for being a member. Miss Phoenix 91, thank you for gifting people a membership. Pascal, man, appreciate the $1.99. Raygun, man, appreciate you coming through being a mod. Man, big up to you. Appreciate the $2 super chat. What's up, Miss Essence? You saw this. It was ridiculous. Shows of what times we're in. Yeah, I think it's unfortunate, but it is what it is. People want what they want, and they want a way to get it. So it is what it is. Appreciate you liking the channel. Revamp. Yeah, had to switch it up. Had to restyle everything. Try to kind of move in a different direction. So I see big ticket items and hauls on a $20, $30 meal. Yeah, I agree, but I know, to me, and the Miss Essence, I don't think DoorDash is a good value because of what they charge to deliver. So I really would be hesitant to do DoorDash plus Klarna, right? Because to me, it's a lot of steps I got to go through just to get food, right? To me, I just would do let me do takeout. Let me just order it and go get it. However, I'm not their ideal customer. Because to me, there's a lot of steps I got to go through just to set all this up. Like, it's a lot. And then I'm paying for everything because you're going to pay a premium on both ends. But I don't get it. But I'm not their ideal customer. But I just think it's very, very unfortunate. So let me bring in Brown Girls, and we're going to keep. You can hear me?
Yes, can you hear me?
Yes, ma'am.
Okay. Hello everyone, and Mr. Dave. And I promise I'm gonna stay on topic this time.
Okay, I appreciate it.
So I want to talk about how easy it is to get in the hole with these buy now, pay later apps.
Okay.
Because I have experience with this. So I'm not, an angel or perfect when it comes to this stuff. And that's why I like your content so much, because a lot of stuff I used to do, and I've commented and said things, but a lot of stuff I used to do, you have really helped me get past that. But DoorDash and Uber Eats and all of that, and then you're adding Klarna on top of that. Now I used a different company, but let's say you have $300, and then you're like, oh, Afterpay, and then you do a bunch of different orders and you have like 6 orders with your $300. It seems like a good deal because, okay, so I can get all of this stuff now with $300 versus buying 2 things now with the $300 and then like going like paying everything in full as you go. You don't have to have everything all at once. And I feel like these companies exploit that if the person isn't disciplined within themselves. Like I feel like these apps count on you not being disciplined and just impulse buying.
Yeah.
Or like, oh, I see I want something. Oh, it's like for example, I wanted to buy this hairbrush, a detangling brush. And they were like, "Oh, pay in 4." I'm like, "Why am I paying 4 payments for a hairbrush?
Yeah.
Either I have the money or I don't." And again, I'm not judging people because I fell into it, but it's very easy to get in the hole. Right then, you get all of your stuff and you use the $300. Your next paycheck comes, you owe Afterpay $300 again.
Okay,
You
explain
owe.
that. Oh, explain it again one time. Do the numbers again real quick so I can understand it.
Okay, I'm sorry. I'm sorry for confusing you.
Now you
So if
confuse
you
me. I just want
have
to make sure I understand it.
okay, you have $300.
Okay.
And then you go to Klarna. I'll use Klarna since this show is about Klarna. You go to Klarna and you use the $300 at 8 different stores. You have all of your stuff, but you still owe them 300. You are now tied to the $300. You owe them $300 for like 2 months.
Okay.
So the $300 isn't really yours. Like it's not really, if that makes sense. Like by the time you spend like if you don't use these apps, by the time you spend the $300, like a little bit at a time, you might figure out like I don't really want this, or this isn't gonna be useful to me, or I can wait, and you end up you're better off than going to all 8 stores with your $300, and you still owe them $300 every 2 weeks.
So
For
how do
the next 2
what?
months.
But why do you owe them $300 every 2 weeks? That's you paying it back.
Because you pay in 4.
Okay, I see what you're saying now. Okay,
So
that
you
makes
have
sense.
to give them $300 4 times. So you spent, okay, let me do some quick math.
So that's $1,200. That's
Yeah.
$1,200. Okay, I feel you. That's $1,200. Okay, I feel you. Okay, yeah, that's crazy. Okay, I feel you. Okay, that makes sense. Yeah. So let me ask you a question. Since you said you use these, even though you know sample size would be 1. When you were using these apps, did you have access to traditional credit, or were they in lieu of traditional credit?
Oh no, I had this is fresh out of high school. Brown, she had a job and everything like that. So
Okay.
I was just excited to spend money and not have to ask adults for money.
Yeah.
I was just like, I'm gonna get everything I want. But I did have credit. Like I used my debit card. Like I was banked and everything like a legitimate bank. I used my debit card to use the sites.
Okay, that makes sense. Okay. Yeah, I feel you. I ain't want to cut you off. Keep going.
But yeah, that's basically what I was explaining. Like especially for DoorDash, where your food could get messed up, the food wasn't satisfactory. Oh, they left the item. It complicates DoorDash too, because who gets the money back and how long does my refund take if you messed up my order, or you forgot something, or the driver messed with my food? How long does it take me to get the money back? Because I just added a third party to the transaction.
Yeah.
So it complicates things as well. But
Yeah.
I just don't think it's worth it. But like I said, I'm not perfect and I understand the lure of these systems. I use them still, but it's for like, so CompTIA, for example, I'm in tech. So I'll use it to get certifications and things like that. But I'm going to make the money back within 3 paychecks if, I pass and my manager approves and I get the raise for getting the certifications.
Yeah.
So it pays for itself.
Yeah.
Versus DoorDash, where it's just a hole. So that's what I was explaining. And I agree with your point that, they want more consumers because they realize people are scared and trying to conserve money. So this is a way where they feel like it's not actually conserving money because, like I said, you still owe them money for the next month after you make the initial payment.
Yeah.
But they want you to feel like you're conserving money.
Yeah, I mean, it's and I understand what they do because I really think, this is in food. I don't know if this is available now, but I think if they do this for like utility bills, I think this thing's gonna blow up. So I don't know I don't know the extent of what you can use with Klarna or Afterpay, like what you can actually, or Affirm, what you can actually pay for. So from my understanding, it's kind of like just consumer items and food. But like if you can do this for like utilities and car payments and stuff like that, I think this thing's going to blow up, because to me it's just another form of IOUs. But the problem is that your relationship with the person that's giving you the IOU is a little bit more severe than like a traditional credit card company.
Yeah.
Yeah. So, I mean, it's interesting. I mean, I don't judge anybody either. I've used check cashing before, but when I use it, I didn't have no money. So my thing was, this type of stuff wasn't available when I was in my early 20s, because, you know, we just didn't have this type of technology. So you would get something, I don't know if you're familiar with check cashing. You would get something called check cash, and you would go write a check. They would give you the money. They charge like 18% interest until you paid it back. And then if you didn't pay it back, they would kind of tell you what they were going to charge you. You know, it'd be a bounce check. And so they've kind of gotten rid of a lot of those. A lot of those got a bad name. People said they were predatory, yada, yada, yada. But they were for people that didn't have access to what we call short-term liquidity, which average people don't have access to. Even if you have a bank won't give you $300. So if I have a $300 bill, I need somebody to give me $300. So the check cashing places would provide that service. I see this now with consumer items, but also I know that there's an app to where if you work at Walmart, they will give you an advance on your paycheck before you get your paycheck. So they're kind of serving the same purpose as this check cash in place, but now it's like an app to where if you want your money early before you actually get paid, they'll front you a certain amount of your check early. And then now you have that liquidity. You can go do what you want to do.
Yeah, a lot of jobs have that.
Okay.
Dave and different companies like that. There's so many. It's the same purpose, but there's like so many little things. And then like if you mess up with one company, oh, I'll just go over here, and they don't share information. So it's just, you know, I just came to say, you know, I agree with you. Like it's a slippery slope if you're not, like I said, like these are beneficial if you can use them correctly.
Mm-hmm.
Because like you said, we don't, even if we want to do the right thing or have a vision for what we're going to use it for, a lot of us don't have access to this stuff. So it's good for the average consumer if they're going to use it correctly. But if you're like living kind of like a hedonistic lifestyle and just not caring about your finances and how it could affect you, it's easy to get into the hole. And it takes a while to pay it, especially it's like if you DoorDash 3 times a day or 2 times a day, $30-$40, it's easy to get in the hole and you can't pay it back. And you're still beholden to the company to pay the money. Because like I said, you know, you every 2 weeks, you owe them some kind of money. And you might want to go do something else, or another bill came up and you have to decide between your Klarna bill and an actual bill that is necessary for you.
Yeah, that's I didn't know it was that severe. That's crazy. Yeah, that's bad. Yeah, okay, I see what you're saying. I didn't know I didn't know those was the relationships. Yeah, that's wild. Yeah, I just don't understand why DoorDash would be. I don't know why takeout food would be that attractive to enter into that type of relationship. I just don't. I don't get it. I don't see whose food is that good.
And they always Mr. Dave. They always mess up the food. It's
Okay,
never right. It's never right.
Yeah, I just don't see whose food is that good where not only do I got to DoorDash it and pay to get it delivered, then I got to deal with this other group of people. I don't know, but like I said, I think it's for like a different market and also for maybe a different generation. Because again, if we have a large amount, you know this because you know tech from like an adoption standpoint. Once this becomes native to people's behavior, they'll do it without thinking about it. So I think because of the age demographic that I come out of, this is abnormal, but they're going to get people in my age demo too because of their situation. But I think if we can get enough people of a certain age group to where this now becomes native because of their economic situation, because of their poor impulse control, and because of the accessibility of it, they'll start to do it without even thinking about it. And you see this with like younger people. You see like young people always on tablets. You just got to imagine in 10 years, in 10 years, what are they utilizing those tablets for? Because we've already socialized really, really young people to just have a tablet in their face all the time. So then now we've already set the foundation to deliver them things through that tablet because they're used to what? Just looking at the darn tablet all the time. When I was a kid, there wasn't no tablet to look at. Now these kids just look at tablets. I'll be in church and be kids in there with tablets with the headphones on. I don't know why they can't sit in church and listen to what everybody else listens to, but that's just the era that we live in now. So I think that adoption is really, really important. And that's something that tech is really, really good at. is taking a segment of the population and getting them very accustomed to doing certain behaviors. And then we can kind of grow that space because we already got them accustomed to, if I want to buy something, first, you might remember one-touch shopping, right? Where there's no process now to buy. You just click one button and everything gets done for you on the back end. Now we got the same kind of process, but now even if you don't have the money, we got a way of figuring that out for you too. It's just crazy, but it's consumerism.
Yeah, and a lot of these tech giants, their kids don't touch the electronics they allow other kids access to until they get to high school, where it's like necessary for research and things like that. But a lot of kids, their kids do not mess with this technology the way they push it to other people's kids.
Yeah, I
But
believe
again,
that.
this isn't the this isn't the show for that. But
Yeah,
it's
I believe
interesting.
it. I believe you. All right, so I appreciate it. I'm glad that I'm able to give you some value to get you to look at things from a different perspective. And yeah, just encourage you to stay focused, do what you got to do, because we see now there's a lot of pitfalls out here to get people caught up. And it's really to make sure that people stay stuck at that $45,000 to $50,000 income level and just have to deal with life at that particular level for the rest of their life.
Yes, sir. Thank you so much for all you do, not just for me, but so many people. Keep doing what you're doing, sir.
All right, be easy, take us out.
All right.
All right, peace. Okay, so big up to Essence Buckingham, Miss Brown. We're going to keep pushing. Like I say, anybody got an answer to the UPS question, you got to come on live, though, to get to $20. So Ms. Alexander says, watch the FOMC from 319. You'll get so much trading data, most definitely. I talked about earlier, Ms. Alexander, I think if they had talked about not easing the balance sheet, I think the market would have really slammed down, right? I think the market would have really sold off aggressively. It sold off today in the second half of the day, but I think the market would have sold off aggressively yesterday. So Ms. Alexander says she trades Lennar and DRH Horton. Lennar reported beats and got it down. DRH is down after the market. They report next week, definitely. I was talking to somebody that's big in real estate. How do they think the Canadian tariffs on lumber would impact the builders, right? And was trying to get them to kind of see the larger aspect of that particular situation. Thoughts of a wildflower. A lot of YouTube videos, people talking about how their mortgages have gone up, not being able to afford it. There's many signs of volatility. Yeah, I was reading something earlier today about Florida trying to get rid of the property tax, which I think is going to be catastrophic to Florida. But the governor there, he's brainless. So that's in line with what he'll do. So I think in Florida, high insurance costs, other associated costs are making it very difficult for people to maintain their property, which is very, very unfortunate. Jason Sneed, when do you think the masses will finally see what's going on? Never. I don't think it's designed for them to see it because I think most people are distracted. And then again, we're dealing with a large amount of the population that can't read above a 6th grade level. So will they finally see what's going on? It'll never happen, right? Because they've been educated to not see it, right? And they're fine with not seeing it. We got a whole segment of our population, as long as they can get sex and drugs, they don't care what's going on. As long as you give them sex, drugs, and fast food, they don't care what's happening. They don't care. Appreciate it, Miss Alexander. So TJ says this app called Rain app, use it in 2020. I feel you. Yeah, I mean, you can buy stuff on my website with them. I didn't know you could use it for food. But I don't do delivery. Unless it was like an extreme situation, like I can't leave the house. But I know a woman out here in the metro area. This was years ago. She paid off her college by doing Uber Eats because there's a certain segment of the metro where, like I talked about before with Miss Brown, they've been socialized to utilize those type of platforms. This was like 6-7 years ago. This ain't even like recent. And she paid off a really, really big college bill doing Uber Eats delivery in the afternoon to those people, right? Because they just They not leaving their house. They come home after work and they're not going nowhere, but they will do Uber Eats. So it's a thing. It's just not my thing, but it is a thing though. You know, it is a thing. So JLD, great question. I need to go do some research on Yarvin's Butterfly Revolution. I don't have enough of a background on that to really answer that question, but that's a great question. Give me something to go look up. So I appreciate the question. Pascal says, you believe that Steve Jobs and allow his kids to have Apple products? I feel you. Yeah, I believe that. Yeah, we were talking about early on Erica's video that people from a higher like net worth situations, their kids get a different education. I was talking about that with somebody in the chat. Their kids definitely do get a different education because their job is to be in a leadership position in society, not just work like a 9-to-5. So they get taught different skills that allowed them to function differently because of what's going to be expected out of them. So they don't get exposed to certain stuff, and then they do get exposed to other things. There was a video I did years ago on my Facebook about how I think it might have been Goldman or one of those particular investment banks. They have a camp for the children of their clients to start teaching them about how the markets work, yada, yada, yada. One way is to teach them, but also ways to develop relationships with them. So they make sure they keep those particular accounts, right? So there's a lot that goes on in certain networks that a lot of people are not aware of. I may do a show on it because I could really, I know a Anglo woman that went to UVA and she kind of talked about some of the stuff they do there. Because I think because we don't have exposure to certain stuff, we put people on a pedestal and don't really realize like it's not what people think it is. But that's a whole nother conversation. So big up to Pascal. Okay, so nobody took my bait on the UPS deal, and it's not bait from a negative standpoint. It's just nobody took the opportunity on the UPS. So make sure I got all of the super chats. Appreciate everybody for coming through. So I want to really encourage you. Make sure that you stay abreast of these economic situations. Take Miss Alexander's advice and go watch the FOMC meeting from 3/19, which is yesterday, right? It's really, really good. Been a lot of volatility in this market. Let's see if it slows down after April, because a lot of people made a lot of money January through April. Like I know people just banked out, like they banked because of the volatility. Let's see if it slows down after April. Want to really encourage you to look at the sale offer we're doing for the VIP course. That'll be over the end of this particular month. Then we're going to start moving in some different directions. We got some products getting ready to come out based on some research reports that we're doing. But yeah, the FOMC conference. So Miss Texas Cannon, definitely it's on YouTube, right? It's on the Federal Reserve has their own website, and then pretty much every financial platform that's an actual legitimate financial platform like the Journal, Bloomberg, they also probably will have a recording of it on YouTube, right? So they do it live, and then they also now do a recording. So like it's all on YouTube, but the Federal Reserve got their own YouTube channel. So they got their own stuff. So they got a lot of stuff there. Federal Reserve got a website. They got multiple branches. So a lot of this information is available to the public, is that they know that the public's not going to pay attention to it. So they just do what they do and they keep it pushing. Selfmade says, I'm surprised they didn't do Uber first. They probably getting there. You know, they got Amazon and they got DoorDash, so they're in a good position with whatever book of business they currently got before they IPO. Klarna has been around a long time. I'm surprised they're IPOing right now, but it is what it is, right? It is what it is. I'm surprised they're IPOing at this moment. There's another IPO I'm looking out for later this month. I'll talk about that later. But yeah, I'm surprised they're IPOing now. But they already got Walmart. They got DoorDash. They already got their current book of business. They in good shape. You know, just got to keep maintaining. Okay, so y'all stay safe, man. Be easy. Talk to you later.